Thanks for joining my market report. My name is Mike, and if you're new to my channel or my videos, we create these videos on mortgage rates. We kind of get into what's impacting them on a daily basis. What it could be something from headline news or daily or economic report, or sometimes the sentiment on the markets has simply changed. And if you're on the sidelines, you may not understand what's really driving these rates. And we're here to kind of give you that information as to what's really out there, what's impacting rates, if the trend, if they're going upwards or downwards, so that way you guys get better understanding of what's going on with the market here. And if you're in the real estate market, well, this could be very important for you to follow, so that way you can kind of follow along where the trends are, where we're currently at in any cycle stuff. If you guys are looking to refinance or purchase, well, this might be a good video for you to help determine if you want to kind of lock in on a rate or if you want to kind of hold off a little bit. We're here to kind of help you guys out. Hopefully that will give you the information you need to make an informed decision. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. We're here to help you guys out with your refinance or purchase needs. So if you're looking to refinance, we can certainly run the numbers and get you guys the best deal possible and the best program. If you guys are looking at buying, we can certainly get you guys pre-approved and finance your next property as well. So without further ado, why don't we jump right into it? We'll start off today with the construction spending on the economic calendar with construction spending for the month of November. So October was actually revised slightly higher from 0.2% to 0.4% increase month over month. Forecast for November was at 0.6%. It came in at 0.4%. So overall, decent number. They're not, nothing really big there, probably because this was improved by 0.4%. So that kind of help offset some of this, the forecast right here. But this isn't a very high impact data anyways. This week we do get our jobs data that would be important. We'll get the ADP coming out on Wednesday. That is the private payrolls. We'll get the weekly initial jobless claims on Thursday, and then the Bureau of Labor Statistics will release their numbers on Friday, and that would be the big jobs report there. Now, obviously, we won't really get anything probably till next month when we get to January. We'll want to see what January might look like, primarily because what happens is during the holidays we get people get seasonal jobs for a month or two, and then they get laid off usually in January after the holidays. And we'll have to kind of wait and see how those numbers look in comparison. Now, a little bit about what's going on right now. This week also we got the Fmc Meeting Minutes that happened last month, and that's going to be something that they're going to want to look at this week as well. They'll give them a little bit more insight as to behind the scenes of what was going on with the FMC than just what they provide on their announcement, and that could potentially have some market moving effects to it, because the whole next half of the whole first of this year will be discussing, of course, the possible rate hikes that the Fed will be implementing probably by June, July timeframe. And of course, they're going to be wrapping up their tapering probably by March here, assuming nothing else pops up that would create any delays in those plans. So without further ado, why don't we jump over to MBS or mortgage-backed securities, see what's going on with rates here today. They're looking pretty bad today, unfortunately. We did start off a little lower, and then on top of that, we dropped even further. We're down about 45 basis points, which translates basically almost a half a point in terms of pricing. So at no point on Friday that closed, or Thursday or Friday last week, it's going to cost almost nearly a point now with today's pricing here. And as you can see here, we're dropping quite a bit as a result of that. And a lot of it had to do with right around the, as I said, pretty much from the beginning, from 6 o'clock on all the way down. It's been kind of that steady decline right there. Where's all the money? What's going on here, and why is this? A lot of money is just going back into the stock market. We're seeing a lot, stock market kind of taking more of the liquidity. They're putting. Tesla came out with some very good results in terms of their shipments. Last year they blew out their shipments in December, and basically you get some stocks that are doing pretty well. So a lot of money is just going back into stocks currently right now as a result of those. Now, could this change? Yes, this could potentially change, but for the time being, they want to get a better rate of return on their money in stocks than they would versus mortgage-backed securities or bonds or treasuries here. All right, so let's take a look, see what Treasury's doing. Treasuries are also taking a bit of a beating today. As you see, we've been jumping all the way up here, up to the new technical level here. We're up just under 1.62. This is the highest actually we've been in approximately since November here. So we're back here is right around November time frame when we're up in this range here. So this last time we've been here in about just over a month since we've been this high. Been that high right now. All right, so that's pretty much the wrap for the day. However, we'll touch on one more last thing, and that is the conforming loan limit average mortgage rate. And 30-year came in at 3.27, and the 15-year came in at 2.6. Again, these are national average and for conforming loan limit, and they do have points built into these. So you can take these kind of with a grain of salt. They just kind of give you a little bit of a baseline to what to look at. There are a lot of price adjustments to a rate. So when you get quoted, a lot of variables go into that rate quote. So you might be somewhere near there, or depending on what kind of loan you got. So it goes from loan programs have different rates to your equity or down payment, depending if it's a purchase or refinance, to obviously the type of loan program. I mean, obviously, like if it's a 30-year fixed conforming, or if it's a 5/1 ARM, for example, or 10/1 ARM. I mean, we all know these things, but unfortunately, some people disclose those as fixed, so it can be a little bit more deceiving. So we just want to be up clear what kind of variables are in there. So if you guys are interested in getting a rate quote, please feel free to reach out. We're here to help you guys out. We're here to answer any questions you guys might have. If you guys got questions regards to but the process, or if you guys got questions about anything about it, real estate, we're here to help you guys out as well. So please feel free to reach out. We'd love to earn your business. So again, we'd love just reach out through the social media site that you found us on. In the meantime, thank you so much for your time for watching these videos. If you guys like it, please smash that like button. You guys help our videos out as well. You guys have a great rest of your day, and we'll look forward to see you guys in tomorrow's video. Bye-bye.